my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A reactionary bullish harami yesterday to the last three sessions pattern of a possible evening star pattern. There's a lot of complex forces going on here. We have the medium moving average, currently 120.51, acting as support and resistance as appropriate. The short moving average, currently 120.22, that seems set to tie up with some light congestion from 2 weeks ago in the 120.30 to 120.35 area. The recent 50% Fibonacci line below at 119.75, plus its partners, the short medium moving average, currently 119.63, and the long moving average, currently 119.46. And finally, the separating overhead resistance of the neckline of the January to February reverse head and shoulders continuation pattern, currently at 121.11, and the 2021 downtrend, currently at 120.99. All these forces pulling in their directions and sometimes switching direction as well. We nevertheless still have overhead cap provided by the old March 2018 low at 121.52 and the recent failure to penetrate this cap. So far today, an immediate countering move lower to yesterday's bullish harami, down through the 120.30-35 congestion in the short medium moving average. Not that much further, as not far below we have the combination of the recent 50% Fibonacci line plus the short medium and the long moving averages. Cable, aka sterling against the US dollar. A bullish harami yesterday after the previous session's long black Maribosa. This move back up was a reaction to the initial move lower and closer to the lower time, currently 137.60, the June to September 2020 bullish shift pitchfork and its partner the medium moving average, currently 137.73. Please remember, this pitchfork has given the bullish angle of attack of this market since September of last year and has also been partnered by the medium moving average throughout all that time. Overhead, we still have the significant resistance at 139.99. This 139.99 level has rebuffed 5 earlier attempts higher since late February, and even that attempt higher back in late February was turned around after a week. So it's important to pay close attention to it and the resistance levels beyond at 140.75, 141.43 and the March high, 2018 high at 142.43. We also have the double bottom formed since mid-March. A preliminary target X for the double bottom is in the 142.45 area, same areas as the March 2018 and February 2020 highs, whilst the full target X1 is in the 143.30 area. So overall, we're still well within the June to September 2020 bullish shift pitchfork. So far today, an immediate reaction back down through the short medium moving average, currently 138.75, and the short moving average, currently 138.56, but then halting, probably for the same reason, being too close to the lower time and the medium moving average combination. Euro against sterling. Okay, an absolute example of dichotomy of this market. On the one hand, we managed to make a monthly key reversal up last month. On the other hand, yesterday prices punched down through the April uptrend, currently at 87.12, that along with a flat overhead trend line at 87.19, together make up a possible ascending triangle pattern. Thus, we now have to look carefully and see if this move lower is the real thing. And the first impressions are that it is, and not a false break lower. The market also penetrated but did not close below the April 2020 low at 86.69, which has become an important level in recent days. So far today, a further gentle move below the important 86.69 level. The next support is the flatlining short medium moving average, currently 86.20. This move lower could make the recent ascending triangle morph into a possible small double top Adam and Eve type. And just keep watching this space. US dollar against the Indian rupee. A fifth bearish black crow yesterday, but more importantly was all the following: a key reversal down, a bearish engulfing pattern, and a bearish closing black Mariposa. Yes, all of those at the same time yesterday. Additionally, the market reached the next recent ascending triangle pattern target in the 73.85 area. This was just around the 50% Fibonacci line for the whole of the 2020 move at 73.84, which the market managed to close just under as well. We still have an initial target X for the double top below in the 73.45, with a full potential target X2 in the 73 even area. So far today, a small dip further, but the market has been put off by the combined support below of the 50% Fibonacci line, the September 2019 to April 2020 move at 73.67, and the flatlining long moving average, currently 73.64. Additionally, the short medium moving average, currently 73.53, is moving up to help as well. US dollar against the Brazilian real. An indecisive spinning top yesterday, but could also be seen as a possible hanging man pattern. Usually these are bullish. This comes on the end of a possible 3-day bullish morning doji star pattern. Yet this bullish 3-day pattern, much like yesterday's action, was held down by the combination of the recent 50% Fibonacci line at 544.41, the medium moving average currently 546.21, and the long moving average currently 544.86. There had been support on the way down. Now they are reacting with resistance on the way up. It seems the market is happy to reach the initial target X on the downside though, the recent sideways triangle, but reluctant to move any further towards target X1, a possible full target for the sideways triangle in the 513.80 area. I suspect that may be too much of an ask, but we do have some interesting overhead resistance currently capping the market. That's beyond on the upside. Look to the Fibonacci congestion area, 552.90 to 554.70. US dollar against the Mexican peso. An attempted bearish dark cloud cover pattern yesterday, but though the move went down through the flatlining medium moving average, currently 20.2183, it did not manage to drop below the neckline, currently 20.1261. It is increasingly likely that the market will not attempt to reach the targets X1 to X4 below. That's the targets for the recent head and shoulders patterns. And at least one, the late February to April head and shoulders pattern, may indeed become a continuation pattern. In the background, there's still the possibility of a larger double bottom pattern formed since November of last year. So far, a reactionary move back up over the medium moving average, looking like a possible bullish engulfing pattern, maybe, and maybe it has an attempt at a key reversal up, but it just doesn't seem at the moment to manage the distance and possibly even the close. Topside, we now have the flatlining short medium moving average, currently at 20.42 even, with the recent 50% Fibonacci line beyond that at 20.5849. Finally, just above, we have the long moving average, currently 20.7118, descending into the action. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.